Welcome to the Monocle Banking Podcast, where we scale the peaks of the financial sector, navigating the terrain of the industry's biggest stories and trends reshaping the global and regional economy. Today, we're strapping on our gear and setting out to explore Operation Phumelela, an ambitious ascent designed to revive South Africa's capital markets and establish the country as a financial base camp for the region. Looking back, my first climb in the world of financial journalism was like tackling the foothills of a daunting mountain range, and that certainly feels like where we are today, given what we've seen in our capital markets over the last 30 years. We have seen a listings dearth, shall we call it. We've had the Box IPO recently, but really it's a global phenomenon with delistings outnumbering listings. So today we're joined by two mountaineers in their own right, Stuart Theobald, chairman of Krutham, and Dr. Leila Fourie, CEO of the JSE and chair of the South African Financial Sector Competitiveness Task Force, and someone who I know, Leila, likes to get out into the mountains. So welcome, and let's rope in and begin. Maybe you can just give us some context as to what this Operation Phumelela really seeks to address. What is the problem that you've diagnosed?
Thank you, Michael, and great to chat to the listeners today. Michael, the project, which is called Operation Phumelela, and Phumelela means success, is really all about building success in our financial sector. We are working towards enabling a regional financial hub, to creating jobs, economic growth, and deepening our capital markets. And this is really predicated off a benchmark or an example internationally, where the London Stock Exchange did something similar. We're focused largely on policy reform, and it's really a very high level and senior delegation of leaders in industry, either CEOs or chairmen, who are coming together in a coalition of the willing to start to really engage on matters that matter. And I think it's very well timed. Coming after the establishment of the GNU, just before we started this podcast, you and I were chatting about the shift that we've seen in business confidence. And so I think now is as good a time as ever to coalesce and to work with private sector in order to engage with public sector on some of these important issues that need to be unlocked to enable growth.
Just looking at who you're going to be working with, I'm not going to go through the whole list, but you've got the likes of Daniel Manele, you've got Michael Katz, very well known of ENS and a deal-making doyen. You've got the likes of David Jarrell, who's really expert on competition law. You've got lots of policy and regulatory lawyers. You've got Johanna Holtzhausen, great deal maker. So a really good blend and mix of people. Who is spearheading the initiative? Maybe, Stuart, to bring you in on this point, I see Krutham is going to be the secretariat. So maybe you could just talk to me a little bit about how this very ambitious project is structured. What is the framework to ensure that you build on these early ambitions?
Thanks, Michael. It goes back several years, I think, and Leila described it as a coalition of the willing, and I think that's apt. It's several people who have come to a common view that we need to work together to take advantage of an opportunity. South Africa sits on the African continent with the most sophisticated financial sector, and really that should enable us as an ecosystem, and I mean ecosystem broadly, from the capital markets through to the ancillary services, legal, accounting, all the way through to call centers. It's a dynamic ecosystem, and it really should enable us to intermediate in capital flows into the rest of the region. So by intermediating, I mean, inside you've got investors from across the world, and on the other side, you've got recipients of investment. And very clearly, Africa, as a recipient of investment, is key, and investment is critical to its development. And South Africa's financial ecosystem positions it well to be competitive in funneling that investment to the right places and managing it. But there is a sense that I think is widely held that we've not been able to take advantage of what looks like an obvious opportunity. And instead, we've watched other centers, both in Africa and outside of it, sort of centers like Dubai, indeed London, becoming places that intermediate. We have financial centers that are managing those flows. And South Africa is missing this opportunity. So we as Krutham have been for a long time. I think there was a strong alignment with the JSE as a critical infrastructure provider within that ecosystem. And then really everybody we spoke to in leadership role in the financial sector could immediately sympathize or empathize with the problem and showed a really immediate willingness to be part of the solution. So it's very exciting, I think, that everyone's now come and we can put some shoulder into the challenge.
Absolutely. To echo both of your points regarding timing, I think there's a lot of momentum that you can seek to use as a tailwind behind this at the moment. It's drawn inspiration from initiatives like the UK's Capital Markets Industry Task Force. Leila, what are some of the lessons from global benchmarks like that we could learn from? Where do you see South Africa lagging the most compared to financial hubs like London or Singapore or even Dubai?
Michael, I think where we're lagging and where we've really taken some pain is in foreign flows, in international interest in our country over the past sort of decade of macroeconomic and political headwinds that we've been facing. And so we've tried to focus on a few initiatives, not too many, initially, that will open up the economy and create growth opportunities. So, for example, opportunities such as accepting dollar collateral or, for example, enabling dollar-based listings. Right now, if the National Treasury wants to raise funds through govie bonds, for example, in dollars, they will have to list those bonds in Europe or Luxembourg. And so really this is an opportunity for us to create some enabling policy that can open up flows and open up activity. We are, of course, really building on the momentum of existing policy direction. So much of what we are focusing on is not new in industrial policy or industrial growth. In the budget of 2016, there was a call for the Financial Centre for Africa's Development. And in the then Finance Minister's budget for 2021, there was a signalling of the promotion of South Africa as a financial hub and looking at a new set of capital flows management and currency, particularly in the Currency Exchanges Act. And so I think that most of what we are doing is really trying to take very much of a global perspective. South Africa is very well positioned now relative to other emerging markets. If you consider what Trump is doing in terms of the protectionist policies and the very negative impact that is having on emerging market flows, South Africa, India, and Saudi Arabia are the three outliers that stand out as potential investment destinations. And certainly on all of the roadshows that we've been doing of the recent past, we've had a very positive reception. I think if ever there were a time for us to be enabling policy to encourage inbound flows, which are supported by a growth in business confidence, now is it.
Absolutely. And interesting that it comes at a time when, again, we see Trump's threat of 100% tariffs if the BRICS countries set up their own currency instead of using the dollar, which, I mean, that's never really been their stated intent. And I certainly see no prospect of a BRICS currency in the next decade or ever. But interesting if we open up the ability for dollar-based listings to speculate as to how that might help us with our non-aligned policy, as it's been stated as well. But that's just speculation. Leila, we've spoken about some research in the past produced by David Holland, I think it was, of Fractal Value Advisors, that showed a 2% reduction in our sovereign risk could boost JSE share prices by 40%, which translated at the time to a potential 9 trillion rand economic uplift. This was a couple of years ago, so I'd imagine the numbers are higher now. How does Operation Phumelela plan to address the government's role in improving policy and that enabling environment? It was very encouraging to see S&P upgrade its outlook from stable to positive. So that's one first little tentative step. Does this signal you're going to, through Operation Phumelela, start to engage government more vigorously on its role when it comes to policy inefficiencies?
Michael, you make some very, very good points. And I think one of the issues that we are facing in our capital markets in South Africa is that our listed entities are congenitally undervalued. In fact, right now, we are more than 15% undervalued relative to our emerging market peers. And when we compare ourselves to global markets, it's more than double that. And so South Africa has great value to offer. And if we are able to create an environment of policy certainty, of political certainty, and of general business confidence in the rand, in our growth factors, in the management and establishment of SOEs and infrastructure that work, then we genuinely create a very good opportunity for flows into the economy. Our listed entities are more than 250, in fact, closer to 300% of GDP in their market capitalization. And so you can see that the capital markets play a very, very important stabilizing and general financial flows role in the structure of the South African economy. I think there is work to be done, of course, in creating policy certainty and in delivering, but I'm very hopeful, and I'm really more in the optimist camp about the potential short and medium term future of our economy based on both government and general policymaker certainty. And certainly the engagement that we've had through Operation Phumelela with National Treasury has been very promising. We've really been welcomed with a very receptive audience, an audience that want to grow the economy, that have industrial policy as a top of house priority. And so I think we're pushing against an open door. I really do believe that we have a common goal, and that common goal is ultimately to grow and build the economy.
Leila, thank you very much. We're going to let you get back into your board meeting that you very kindly left to chat to us here on the podcast today. Look forward to watching the Operation Phumelela project grow and walk through that open door, so to speak. So thank you very much for your time. Stuart, listening to the CEO of the JSE speak, it's very encouraging. I know you've mentioned that South Africa clearly has the most sophisticated financial sector in Africa. And if you look at our currency, relatively stable. We haven't had the kind of volatility that Nigeria has seen with the Naira, that Egypt has seen recently. Yet we've struggled to translate this into regional dominance or global competitiveness. It's an apt time. We're picking up the cudgels of the G20 leadership. What structural issues within the financial sector do you think have led to the stagnation that Operation Phumelela seeks to address?
I think one of them, Michael, you point to the stability of the currency, and that has been a factor, but it's not about the stability of the rand directly. It's really about enabling issuers on the one hand, so those who are raising investment and those who are making investment, to choose their currency and to use our markets to be able to do that. So we talk about competitiveness, and if you are a company seeking to raise dollars, and for many assets across Africa, the dollar remains the most common currency. Now, they can raise money in many different jurisdictions, both stock exchanges, but also outside of exchanges, whether directly from banks or whether from shareholders through private equity transactions. And at the moment, it is very difficult to do that in South Africa. So if I am a company in Africa looking to finance my growth and I want to do that in dollars, I can go and do it in Dubai or I can go and do it in Mauritius, but I can't go and do it in South Africa because structurally the South African financial system requires me to raise funding in rands. And irrespective of the stability of the rand, it means that I have a liability on one side of my balance sheet in rand, and I'm then going to be investing in assets on the other side of my balance sheet in dollars. And that just creates an unnecessary risk for me. I've now got a currency risk that I don't have to have if I've raised my money in dollars so that it matches the currency of my assets. And that simple problem is one of the key contributors to the fact that other financial centers have become more attractive for issuers, whether they're South African onshore issuers or companies and other borrowers anywhere else in the world. And it really comes down to the details of how, for instance, our foreign exchange control regime works and the currencies it requires both investors and investees to operate in. And it's an example of a regulation that leans against our competitiveness and one of the ones that we think can be changed. And indeed, as Leila mentioned, we kind of looking to add momentum to existing policy. And Treasury has previously mentioned that it's open to trade in other currencies, as well as private equity funds to operate in other currencies.
That is encouraging. I was going to lean in on the exchange control point. And it's not only in that area. You chat to high growth scale ups who are looking to raise capital to expand, and exchange controls are a significant barrier to that. And often they're forced to then go and list their vehicles offshore and often move families, and we lose out on those potential taxpayers as well. Just back to your point around Treasury being open to this. We've heard for years that we're on this gradual relaxation of exchange controls to the point where hopefully one day we can just get rid of them because they're an anachronism in a modern financial world. What gives you confidence that Treasury is really now genuinely interested in these kinds of suggestions?
Well, I think there's been several indications from Treasury on its intentions around this. So for several years, Treasury has been flagging that it intends to align us with the OECD code for the liberalization of capital flows. Now, that code really is premised on the concept of equal treatment between countries. And at the moment, exchange control sort of works against that because we allow foreign investors to come into and out of South African markets with absolutely no restriction. However, we prevent our onshore savers from freely being able to invest their money in those foreign markets. So we're really creating an unequal playing field where we're saying to the rest of the world, sure, you're absolutely free to come and invest in our markets, but we're going to stop our domestic savings pools from being able to invest in your markets. Now, of course, that's not completely the case because people have foreign investment allowances and so on. But it does, on the formal nature of the regulation, have this very clearly uneven playing field. And Treasury has indicated a desire to address that. It can become an issue in our global standing. And the OECD as an organization really exists to, for instance, create tax equilibrium and prevent countries from unfairly eroding each other's tax bases. And there's a bit of a sense that in how you do exchange control between countries can also unfairly prejudice your savers if you're treating them differently to how your domestic savers are treated. So there is momentum to change that. But, government has a finite amount of capacity. There was some reform momentum towards 2019 going into 2020. Then we hit COVID. COVID, understandably, was a major distraction in National Treasury as well as the rest of government and all the rest of us. And part of the Operation Phumelela is to restart some of the momentum that was lost through the COVID experience. I don't think anybody is in principle opposed. It's simply the pragmatic issues that need to be addressed. So in principle, we accept that we want a modern exchange control regime, one that enables the economy to grow, one that meets our international obligations. But it takes considerable resources to achieve that reform. And Treasury, like everyone else, has finite resources. And part of the ambition of Operation Phumelela is to enable change by conducting the research and doing the detailed technical work. Because you can accept at a policy level that you want to change something, but it actually requires a great deal of financial sector infrastructure. Like you talk about dollar listings. Well, to achieve that, you have ways of holding dollar assets in custody. You've got to have ways of being able to trade, being able to settle in dollars, and so on. So there's a lot of work that has to be done. And it's not just policy work. You've got to get the sector itself to put all that plumbing in place to make what becomes feasible at a regulatory level actually practical in practice. So all of that needs to be done. And certainly the intention of Operation Phumelela is to enable the policy change by ensuring that the technical work is done in the background. And I think the absence of that technical work has been one of the constraints on further reform. As you reference that gradual process, well, it's been more gradual than I think it needed to be, because we needed to get that technical work done.
And is Krutham going to be undertaking a lot of that technical work? And just lastly, what message would you like to send to South African financial sector leaders and policymakers who might be listening? How can they contribute to the success of Operation Phumelela?
In terms of Krutham's role, we are supporting it as secretariat, so making sure that things happen, that reports are written, etc. But it is a voluntary effort in which we're sort of crowdsourcing the contributions. We have set up 4 work streams around particular reform areas, and they're already at work, and we've benefited from the support of lots of skilled experts from across the financial sector. And they are already well into it, and hopefully we can start seeing some of the results of those efforts in the early parts of next year. I think the message to the financial sector is that they should join us, that we think that there is really positive momentum to build on. As a country, it feels we're making progress in structural reform, certainly, but I think also at a financial level, dealing with constraints like the lack of investment grade, like FATF grey listing, there's a sense that we're getting there. And within the next few years, we'll be able to regain our global standard. That enables us as a financial sector to do many things, lots of kinds of business in the international financial system. So we're planning for success. We want to make sure that we are ready to go as those kinds of successes are delivered. And the financial sector should be excited about that. And to regulators, we're very keen. I know there are many regulators who are eager to enable progress, and Operation Phumelela is a capacity that could enable them. And we're certainly open to having conversations about how we can do that. And if they do want to get hold of us, there is a website set up at operationphumelela.org.za, and that is a way to reach us.
Fantastic. And I think in the spirit of the GNU, this is that kind of partnership in practice. If you want to get involved and roll up your sleeves and contribute positively to the solutions that we need, this is a great way to do it. If you work in the financial sector, Treasury proposed a comprehensive overhaul aimed at simplifying regulations and reducing administrative burdens as they relate to exchange controls. But it has ground down to a glacial pace. Hopefully this does speed it up. And these are the kinds of investments into developing the architecture that will enable growth. And through that J-curve, it'll happen quite quickly once all of these pieces fall into place. Stuart Theobald of Krutham, thank you very much. He was joined earlier on by Leila Fourie, CEO of the JSE, sharing great insights on a critical initiative, Operation Phumelela. It's aimed at really helping position South Africa as another global financial center. We'll be watching quite closely as it unfolds. And thanks to our listeners for tuning in. As always, remember to like and subscribe to the Monocle Banking Podcast. Take care.